All right, nothing changes, but the shit don't fucking work. Okay. Mm, mm, Mm. Yeah, well, for whatever reason, I'm having trouble. Mm. 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 I want to be clear that I took this trade in the sim. I do think that the market potentially will continue to go long, but I'm just trading the pullback. I'm just trading the pullback here, but the market could potentially still go long. But I am in this sim, so I'm taking this trade in this sim. So Stani said that he was watching the 3 minute footprint chart on NQ. And at first there were some aggressive sellers, but when it dipped down, the passive buyers were waiting. You know, honestly, I was actually thinking about buying this level because it just kind of it dipped below that range and kind of swept liquidity. And this is why you saw aggressive buyers because of this range right here, this consolidation. And price just swept underneath it. So price just swept this. I was actually thinking about like I said, I was thinking about buying this, but I'll just wait for the pullback on this. I'll just wait for the pullback because you still have the longer term EMA sloping to the downside, and you have both short term EMAs and VWAP sloping to the downside. So instead of trying to find and pick this bottom, I'm just going to wait just for the pullback. This thing is definitely going to pull back. And if it doesn't, then, you know, it's not a big deal, but I'm just going to wait for the pullback. But this is why you saw aggressive buyers. It swept underneath that range, swept the liquidity, and popped back up. Now, the bulls are going to have to definitely prove it here. They're definitely going to have to prove it. And that's obviously by breaking out of the short term trend. And potentially, we might get a retest of about like maybe 350, maybe a retest back up here to last week's close at 369. That's definitely possible. Definitely possible. Uh, I was going over some data this weekend, and I have been slacking on the CFTC data for sure. I have been slacking on that. Just a lot of process changes. So, and I think when we had that holiday, the CFTC data, for whatever reason, it takes forever for them to update it. So usually when that happens, I kind of fall off from collecting the data because they don't update it, and I'm not going to sit here and I'm not going to sit there and chase them down. Yeah, they still haven't updated it for whatever reason, and I hate when they do this. They only got it up to May 20th. I mean, is that up to date? Was May 20th last week? Yeah, May 20th was 2 weeks ago, or no, it was last week. So they don't. Maybe they do have May 27th. Let me actually look at that before I start running my mouth. Okay, so all right, so the data is up to date. Let me actually just start inputting this data. Yeah, shit, I haven't been putting this data in for a while. I am definitely behind. Hmm. 29th, 6th, 13th, 20th, 27th. All right, so May 20th, April 22nd. Yeah, so right after Easter, that's when I stopped because they were just being delayed. They were delaying the data, and I didn't really feel like 20th, but and May 27th. All right, so let's see what the institutions are doing for this week. Let's see what they're doing this week. And I'll just input the other data at some other time. Okay. Hmm. Well, we could see a change in direction this week. We can definitely see a change in direction. Mm. It looks like the institutions right now are 60% long right now. With that drop that we saw last week, I'm not surprised by that. We had a big move higher due to Nvidia earnings, and we just had price retracing. People taking their profits from that big move up in this uncertain market. So, I mean, obviously that's not right. So I10 divided by K10. Okay. All right. So right now, if this thing wants to load, the CFTC data suggests that the institutions are 59 or 60% short, or 60% long, and only 40% short. So this week we could see a big move up in the indices, but we will see. The CFTC data hasn't lied yet. It definitely has not lied. It hasn't been wrong. It doesn't mean that we can't see a move down, because who knows? Trump can say something where we could see a sharp move down, and then he can say something else, and then we can see a 2,600 point rally. So we just have to be very mindful about what direction and what context the market. I guess we just have to be more mindful of the context of the market. I didn't want to say something because obviously the market has just been crazy. It hasn't been trading the way that we're used to trading the Nasdaq. I've been collecting this data, and the Nasdaq has not been testing a lot of levels. She has not been testing a lot of levels. We've been missing them. And then probably the next session we'll get a test of the level, but she hasn't been testing no levels. She's been grinding the majority of the session. It's gotten to the point to where you cannot trade the Nasdaq in the middle of the chart and be successful. You just can't. You're literally gambling if you're trading the middle of the Nasdaq chart. And as I was thinking about this idea kind of popped into my head about a reason why. And I want to be very clear that this is an assumption that I've come up with, not something that's been officially announced. But because a lot of the manufacturing from Apple, all the tech companies are being forced to bring manufacturing back here in the United States, and they can no longer use the cheap labor that is China. I think a lot of people are kind of thinking that this tech bubble is going to pop. And again, that's my assumption. The stuff with China, the stuff with the chips, manufacturing. If Apple is no longer going to manufacture in China, will they get the same deal in India? I think that's where they were trying to go, if I'm not mistaken. Trump is saying that he wants manufacturing here in the United States, and obviously you can't make a product for $50 as an example and try to here in the United States and try to resell it at a premium. That's what China is for. And if we're in this economic war with economic war with China, tariff war with China, then that's not going to be good for business. So that was my assumption. That was the answer that came to me. And I think that's a good assumption. I think I'm gonna go with that. But the Nasdaq doesn't trade the way she used to trade. No, she definitely does not. Yeah. Yeah, I don't know what the heck that's about. It got to the point to where I was focusing more on gold than the Nasdaq. I don't know if y'all guys were with me, but I was in a position right here, this 380 position. She stopped me out, and she stopped me out just to make this big giant move down. And like I said, I felt attacked because it was like I know I was reading the situation correct. I did see the rejection at 80, and so I did get a order at 360. So I can't 100% blame the Nasdaq, but for the random pop up stopping me out, and then after she accomplished her mission and got as much liquidity as possible, she grinded down. And then we did not see the market actually, or the bulls actually, give up on this thing until about around lunch. They gave up on it around lunch, and when lunch was over, they came back. It's very interesting to kind of look at the charts and kind of see the psychology, because they literally gave up at lunch. They literally gave this up at lunch and said, "We'll just come back." And they actually came back after lunch, and we see price taking out the high from pre-market. So very interesting price action. Very interesting. He was thinking the market was overbought. That's interesting. I wonder why he thinks the market is overbought right now. If we kind of go back to, for the lack of better words, the old ways, yeah, a lot of these companies are overvalued, because if they have to do manufacturing here in the United States, a lot of their profit revenue is going to go down. What makes a lot of these tech companies profitable, like I said, is that they use cheap labor, and they export it here, and they sell at a premium. They hire cheap labor, which also cuts cost. Overseas, I mean, as a business, it's not your job. If a country is selling labor for cheap, it's not your job to sit here and say, no, give these people a fair wage. You're going to take advantage of it, is because you're expected to keep costs as low as possible. This is not a charity, it's a business. And from what I understand, a lot of these overseas temp companies that these companies use, well, they pay the temp companies millions of dollars, but the temp companies pay their people minimum wage. And that is a well-known practice. The company saves money, they get a high quality product that they can sell at a premium. And let's just be honest. Uh, Foreign labor, especially when it comes to technology, Indians run this. They run this shit. And if they're getting Indian labor for cheap, well, I mean, you have to be a very extraordinary technician. I'll just say that, as an American, to be, you got to be a Steve Jobs for them to consider not hiring foreign labor when they can do it better for cheaper. You would have to be an extraordinary talent. And even then, they will probably still go for the cheaper labor, because, I mean, at this point, we have AI basically writing code. So if AI can write remedial, smaller code bases, you really don't need American talent, especially because it's expensive. And over time, Americans become very comfortable. They make mistakes. They become insiders, they become liabilities, all that. So they branch off. Americans are too ambitious. They branch off. You teach them high quality skills. Over time, they branch off and they become competing businesses. You gotta make them sign non-competing, a non-compete. What is it? A non-compete. There you go. But honestly, those don't hold up for real. A business can't tell you that you can't make money for yourself without compensation. Hmm. I mean, this gold play is playing out. I will say that I may actually not get my target hit on this one. I may or may not. We'll see. This could just be a pullback, but then at the same time, maybe I am reading it right. We are making higher lows and lower we are making lower highs and lower lows. But this potentially could be a potential head and shoulders right here at 26. Maybe we might get a bounce at 27. Around 27, we may get a bounce. Maybe, potentially. Price could be trying to come down here to take out low of day, which is really what I'm targeting, is low of day. But we'll see if these things get hit. We'll see. Yeah, I am definitely late. Yeah, I meant to apologize about that. I meant to apologize. Like I said, I get really busy, and that's why all my time is managed the way that is managed. And if there is a slight misstep, my whole time frame, everything gets thrown off. I had to do some extra work. I had to finish some things off. And by the time I looked up, I was like, damn it, it's 8 o'clock. Damn. But I will be implementing some things this week, not necessarily on stream, but off stream. I'm gonna share with you guys. I've recently come to the conclusion, and that I do spend a lot of my free time on YouTube scrolling, deaf scrolling, just looking at shorts, looking at random videos and stuff like that. And that has just been a waste of time. So I will be implementing an app block on my phone. Just block off YouTube and block off everything. Block it all off. I only have YouTube downloaded on my phone. I don't have Twitter, TikTok, or Facebook or any of those applications. Just YouTube. And it's going to block that application from my phone. It just saves the mental resources of trying to fight it. Because I can randomly just find myself on YouTube scrolling and I'm like, when did I do this? But these applications are definitely addictive. I was doing some work and I randomly stopped and I noticed myself doing it. I randomly stopped and opened up YouTube and was looking for a video to watch or listen to as I work. And as I was trying to look for this video to work to, I just started scrolling and wasting time. And I noticed that and I was like, wow, I basically just wasted all this time trying to look for a video to listen to while working instead of actually working, which kind of defeated the purpose. And I've noticed that I like to do that a lot. So by blocking that application now, I have to be forced to better plan and maybe listen to an audiobook while I work versus trying to watch a video because I'm not watching the video, I'm just listening to it. So maybe I'll just re-listen to some of the audibles that I have. And I can be more effective and stuff like that. And I do have my PA accounts this week as well. I will implement a trade checklist. I will be writing up a contract and signing it on stream. I have to kind of walk myself through why I'm taking this trade, where I'm targeting, why I'm targeting it, et cetera, et cetera. And I can't take a trade unless I justify the trade. And I'll be implementing that as well. I feel like if I just start doing that, it will kind of reduce some of the unnecessary losses that I take because I've noticed that all my losses come from after I get a big win, I get back in. No thesis, no nothing. I just get back in and then start trading because I want a little bit more. I didn't like the number that I got, so I just want another number. And that's where my losses tend to come from. And when I'm wrong and I have negative P&L, well, we all know what happens then. We all know what happens then. So I have a number, but honestly, maybe I should just have a one trade a day rule. If I have a winning trade, then I should just walk away from the charts at that point. But I don't want to create rules that limits my ability to make money because that's why we're here, just to make as much money as possible and extract as much money as possible from these markets. And I think this is a great teachable moment right here. I think this is really teachable because we was at an area of support and the bulls failed to break above that short-term trend line or the short-term trend EMA, the 21 EMA. So the bulls failed to break above the 21. The bears were able to successfully reject from it, and now price is continuing downward. And this is why waiting for the bulls to show that they're actually here at this level and waiting for that pullback is always going to be the better trade versus trying to pick a bottom of a move, even if it does kind of look like the bulls are coming in. Now, we could see a big bullish engulfing candle here, but I still want to see the push and I still want to buy just a retest. I still want to buy the retest. And just as we saw last week, we're still getting the senior citizen price action from the Nasdaq where she's grinding instead of making fluent moves, which honestly, it kind of defeats the purpose of trading her, in my opinion. It defeats the purpose. It really does. Yeah, we definitely won't. We definitely shouldn't, Ostani. You've been trading micros, Cave Trader? You know, a lot of these guys on stream or that live streams. At least the profitable ones that grow their accounts, they've all stated the same thing, that they grew their accounts over time and just compounded their balance. Hmm. If you trade your account as a small account and grow it over time, I think that's the best way to trade your accounts. But because we're trading prop firms, we don't treat it as a small account challenge. We treat it as, this is a small account with with a lot of buying power. So I'm going to buy 5 minis on a 2K account, even though realistically that wouldn't even be possible. But uh, being able to trade 10 minis on a 2K account and catch a windfall trade, a lucky break, especially if we can catch a big move on the Nasdaq, I mean, why not? Why not? But I am slowly shifting to that mindset myself. The reason why is, when I do get a payout, it doesn't feel meaningful because of I guess because of how I got it, if that makes sense. There's a feeling that I did not earn it because I traded heavy size, I was right, and I got paid out. And I understand that's crazy when it's said out loud, but we all know that that internal voice, that critic, is always moving the goalpost. And not only is that inner critic always moving the goalpost, but is always generating an emotion that tends to always hold you back or to try to put you back down. That internal critic is like, oh yeah, so yeah, anybody can trade 5 mini contracts and get lucky. Try getting the same results by trading 2 or 1 or trading micros. It's that inner voice is always moving the goalpost. But for whatever reason, that internal critic has access to our quote unquote self esteem, because whatever that inner critic says, for whatever reason, affects our self esteem, confidence, all that. So, anyway. So now, like I've shared before, my goal is longevity in these accounts. And a constant concern is, yeah, I can have 10 wins in a row, but what about that one loss? What about that loss, that inevitable loss that's going to come eventually? What do I do then? Because if I'm losing $700, which honestly to me, I'm kind of used to that. I'm used to losing more than that. So $700 to me is not necessarily a big number. But I don't want to lose $700 in my account. I need to make that shit back. How are you going to respond to that? And as I kind of go over these things in my head, it makes sense to trade the smaller size, maybe 3, 5 micros, take a maybe $500 loss. But then at the same time, if you're trading smaller size, you don't make as much money. So it's always that constant battle between trading the right way, quote unquote, versus trading the way that is going to make you the most money in the shortest amount of time. So it's always that constant battle. And especially if you want to be in this game for the long term, reducing your size will definitely help you do that. Ash trades on my funded futures. It surprised me, and it kind of caused a cognitive dissonance when he was only trading one MES contract, one MNQ contract. And I'm thinking to myself, how does he ever expect to make money trading that way? Making $70, $100 per trade. How do you plan on even getting paid out from that account? And that, like I said, that's boggled me, and that was mind boggling. But one thing is for certain, he should not be blowing his accounts trading one micro or one MES. And if that's his goal, well, it's highly likely that he'll be able to achieve that. And because that is now my new goal, maybe I should take notes. Maybe I should reduce my size. I've already made it clear that I would not be trading the MNQ or the Nasdaq in any of my funded accounts. Strictly evals, but she is prohibited from my funded accounts. Prohibited from my funded accounts. I will be exclusively trading gold in my funded accounts because I have a good understanding of gold. She does the same thing over and over again. I can trust her price action. And if I lose, it's not that big of a loss. It's not that, honestly, I can, with all, this is a 3-point stop. There is no way that gold is going to come back and touch my stop if I'm right here. I can actually reduce my risk and put my stop probably above this high, actually, probably above this pivot high. I can actually put my stop into break even above this high, but I'm not doing that. This is an over exaggerated stop on gold. And this over exaggerated stop is only a $700 loss. I'm actually thinking about reducing my stop and increasing my size to probably 30 contracts or 3 mini contracts and reducing my first target to about 5 or something like that. Because my first target is at 63 ticks. I'm going to reduce it to 54 ticks and take off. So if I have 30 contracts, I'm going to take off at least 20 to 21 contracts at maybe 54 ticks. And if it goes past 52, have my stop comes down to 50 ticks and have it trail. And then allow the rest of the contracts to run. But if I increase my size, then I increase my risk. So that's definitely going to be something that I have to kind of pay attention to. Because, like I said, we can definitely see. Hold on, did we bounce at did we bounce? Okay, so we did bounce at 29, but then they came back and sold it back down. So okay. We are making lower highs. We are making lower lows. Unless we get a bullish candle, I should possibly get this first target hit. Maybe it actually might bounce at my first target, or it might bounce here at 26. It may bounce here at 26, potentially. Yeah, it might bounce here at 26 because I was originally going to go long here at 26.9. But we'll see. We'll see what happens here. We'll see. So Cave Trader say you still trading micros? So Stani says smart money showed up and sold the NQ down. Footprints went from 200 all night to 400, 650 on a 3-minute chart. Okay. So K Trader says that it's all about back testing and how much you made in the back test. Also, if it's not enough money, you can get another account and trade one. Honestly, I might actually start doing that actually. I may just start copy trading and just really reducing my risk and copy trading. Honestly, Alfred, uh, full mini gold. I mean, I did enjoy trading it, but I'm just gonna stick with the micro gold because I can break up the contracts. Yeah, I have to spend more money in commissions, but having a single point of failure on the minis. Yeah, it's just not worth it. I prefer to have multiple targets on gold. It keeps me out of it keeps me in the trade longer and it keeps me from taking trades. So I'm just gonna stick with the micros myself as well. Yeah, you can. And yeah, I see a lot of people use that strategy on Apex. 20 PAs, $200 a day, 4K a day. Yeah, yeah, yeah. I love the flexibility as well. Yeah, Ustani. Yeah, I mean, yeah. So yeah, Ustani said I made a hell of a call last week. I mean, honestly, like I said, it's just the price action. I just had a feeling like when the market doesn't do anything new. The only thing that we do as human is projects our bias onto the chart. And once I saw that this thing pops up with no price action, what comes up must come down. What comes up must come down. Without price action, big moves do not hold. You see, like how we got that big move down and it just pops right back up. Without no price action, the move does not hold. It just doesn't. And back testing, just like Cave Trader is saying, it suggests that it doesn't hold unless there's price action. So he says, PA, a performance account from Apex Revival, a performance account. I had an insider call. Yeah, and I appreciate that, Ustani. Honestly, as I go into the weekend, I do reflect, and I'm the problem. I'm definitely the problem. I'm holding myself back. For whatever reason, I'm holding myself back, and I'm looking for ways to stop subconsciously doing that shit. For whatever reason, I don't want to be. I want to be at a certain level of success, and I don't want to exceed it. My assumption is that once I exceed that level, I'll be in a no man's land. And the way that I envision it is that I go through a door, and when I open that door, I'm in the middle of a desert and there's nothing there. And as I'm being distracted by the nothingness of the desert, I turn around and that door is no longer there. And so I'm stuck in the middle of the desert with nothing. I believe that's why I do it, because I feel like once I cross that door, or once I open, because I haven't opened the door yet. I want to make that very clear. I haven't opened the door, and I know that's not true, or I think it is true. I believe what it is that I may have to work harder to feel like that I've accomplished something, and I don't think that subconsciously I want to work harder than what I'm already working at this point, because it just doesn't become meaningful. So once I exceed that level of success, I self sabotage back into that that space, and I'm well aware of it, very cautious of it, or not cautious, conscious of it, and yeah, but no more, no more. I don't want to do that anymore. I feel like I'm doing it mostly out of habit now, but as I work to be better at not doing it at all. Well, I guess I'll get past it. I guess I will get past it. I will overcome it. I will overcome it. Yeah. I gotta get to this meeting. Yeah, that insider meeting, huh? So damn, Alfred. You know you're saying too much, Alfred. You may know too much now. You may know too much. You were supposed to stay blissfully ignorant about that. Now you know too much. Mm. 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 It's not a black van anymore. Not a black van. No, it's no longer a black van. It's a multicolored van. All right. No, it's a DEI van. It's a DEI van. I want to make sure that we get inclusion when we start kidnapping people. We want to make sure that the van they're getting kidnapped in is inclusive. It's inclusive. So, oh, at least I'm getting picked up by a DEI van. Okay. A BBL van. Shit, it may not even be a van. We shit. Come pick you up in a bus. You know what? Let me try to fix this crap now. Man, I swear, this technology, man. I had this thing working over the weekend, and all of a sudden now it just chooses not to work. Like, what the hell is up with that? It's not picking up my not picking up for whatever reason. It's not. All right, let me see if I can kind of get this fixed. Okay. Oops. Yeah, okay. Yeah, all right. Okay. I don't know why, but yeah. Maybe I just have to close out Ninja Trader 8. Oh, really? Really? Well, why did that work? Why did that work? But this didn't. Let me see this. Let me look at this again. Okay. I mean, if I have to do this every time, then I guess I'll just have to do it every time then. Guess if I have to do it every time, then I guess I'll do it every time then. Okay, so I guess we'll just leave it like this we'll leave it like this. And then we'll just fix this. We'll fix this later on. So I have a Tradeify account that I'm going to start trading, and I have a but I'm going to just focus on my Apex account. I'm going to focus on Apex. Mm. Mm. All right, so and this is kind of why I might shorten that first target because I don't know how many points I'm up right now. So I'm only up 3 points. So I mean, if I was able to catch this top, um, so from 35, well, this thing drops about what 6 points. So I mean, honestly, I would have got my first target hit before it pulled back. Okay. So let's see what they do here at 20. So I'm gonna just put a line here. Put a line. See what it does here. Because I was gonna go long at this swing low because that would be the right shoulder of the head and shoulders pattern potentially right here. We'll see what happens. We'll see. I got some Nasdaq for you. Some Nasdaq. Nasdaq. And I guess I could. I don't think maybe I don't need it. Oh yeah, speaking about trend lines, I saw this over the weekend as I was back testing. And remember that trend line that I kept on the chart? I want to show y'all guys something because I just find it very Ah, man. Ah, man. Ah, man. Hold on. Let me see if actually, let me see. Ah, damn. I actually did delete everything. Oh, never mind. I deleted everything. What I was going to show you was that trend line that I drew. When I said that the market pivoted, rejected, bounced everything under the sun and react perfectly at that trend line, even though it was projected until like the next day. And it like the market was literally using it. So as the market went higher, it was using it as support or I mean as a resistance. And before it made that pop, it was using it as support and then it broke and used it as resistance. And it's just really amazing how just having a trend line on your chart can literally change the context of the market, where the market may reject that and where it may bounce. And I don't know why I did that. I don't know why I deleted everything off my chart, but unfortunately I did. But yeah, kind of like what Cave Trader says with back testing will definitely be your friend. Honestly, it should be your best friend right now. Being able to back test and just become confident with the certain patterns that consistently show themselves while you're trading. Look for areas of consolidation, just like Santiago does, and uses that 50% because that has consistently been working. but it definitely does require you to be patient. And it's very similar to what I'm looking for anyway. I'm also looking for a consolidation. I'm looking for a break in that first pullback. Something, I mean, technically, this would be it, but I wouldn't think that the market is going to double bottom. And unfortunately, in this situation, the market did break. We did get a small pullback. We did get a small one, but we didn't get a deep enough pullback that I would have missed this trade, and I know I would have because we didn't get a deep pullback. But I would have caught the short though. We have a break in that pullback right there, and then you have another break and a pullback, a deep enough pullback to short it, a break and this pullback right here back into support would have caught the retest of this high. Just waiting for that pullback. You don't ever have to feel FOMO. That break, that pullback is highly likely to happen. Highly likely to happen. So that's my setup that I'm looking for. And I'm going to be trading in the context of the market. I do have a habit of getting in the market before the price action actually gets there. I probably should stop doing that. But I have been, but I do that because, I mean, the market, like I said, does the same thing. It doesn't necessarily overshoot at areas of resistance unless I'm wrong. And if I'm wrong, then okay, that's fine. But for the most part, the market is going to reject that resistance. And before it gets to resistance, it's not going to necessarily shoot up to the point to where it comes to my stop. If I was wrong, let's just say that I kind of got in, like here, like at support or something right here, and then I got in before the market was actually ready to react at this level. You can kind of see the market does stop. It does kind of give you opportunities to make a decision if you're going to want to stay into the market or stay in the position or get out. It gives you opportunities. And obviously, if you didn't take your profits up here, he got completely stopped out. But the market doesn't do these breaks. It doesn't break structure the first time. You're not going to necessarily see moves like this the first time. I'm not saying that it's bulletproof, but for the most part, you're going to get consolidation in areas of support and resistance, and from there, you can make your decision. And that's what I've noticed over time, and that's why I do it. But maybe I should stop. And the reason why I say that is just because if I want to get into the habit of waiting for confirmation and just being more patient, then that kind of defeats the purpose. So I do see that gold is almost at that area that I think that we could potentially see a bounce. We did have price come back up. We are still making lower highs and we're still making lower lows. So I think I'm maybe trading in the right direction here. Yeah, on this 18-minute chart, does look like the bears are selling it, but we still got the 200 EMA and the 50 EMA that the bulls can definitely come in at. We could see a bounce at 23 low up there, or that pivot at low of around R2. This little pivot right here, we could see price bouncing here maybe, but this potential head and shoulders, I'm definitely paying attention to that. I'll pay attention to that. Does that do that? As the price does that? Mm. Well, that's interesting. I'm only up 3 points. You're saying are the EMAs on your VWAP indicator? No. VWAP is right here. VWAP is this green line. But it does the long term or the 200 EMA, the gray line, the 21 EMA and the 50 EMA, the short term, they're all in the same area. If you're referring to these red lines, this is the trend indicator though. If you're referring to this red line, is a trend indicator, and these are stop dots. These stop dots are very accurate on gold and ES, not necessarily Nasdaq, for obvious reasons. But from what I've seen, from what I've seen, if you can get in as close as possible to these areas, and if you're scalping, you can definitely put your stop above it, because this is where people, or at least this indicator is trying to suggest that this is where potentially a lot of people's stops are, or at least that's how I'm interpreting it. Because obviously I didn't code or build this indicator, so I don't know what the intentions or what these things are. They're called stop dots, so my assumption is that's where a lot of people's stops are. Or I guess I have to be very technical and as accurate as possible. It's highly likely that this is where a lot of people's stops are. Mm. Yeah, I'm definitely going to bed after this. I'm definitely going to club bed after this. Mm. Still getting that drop on Nasdaq though. Okay. Yeah, I think. Yeah, I think I just got the bounce. I think this might be okay. We'll see what happens here. We'll definitely see what happens here on gold. We'll see what happens because it just actually hit my level, or was it? Where was it at? I think I had my original, yeah, 26.9. And we did see a reaction from there. So I'm gonna just put this data in. Gotta catch up on this data and stop slacking on it. Just been slacking on this crap. Okay. All right, so April 29th. Mm. Yeah, honestly, I'm just gonna not. I'm not going to. Well, I guess. I guess. I mean, I guess it's another line. Hmm. Consolidated. Hmm. Well, well, well. Look at that. Look at that. Look at that. Hmm. Hmm. And this is something else that I'm gonna start doing as well. Reducing my risk. Like if I get a certain amount of points, I'm going to reduce my risk to a point above my break even, or maybe 1 or 2 points depending on how I feel about the position. Yeah, it definitely can be. You know what, Usani? Honestly, as much as it's so blasphemous to hear me say this, but I definitely agree. Waiting for that confirmation is always going to be the better trade. It's always going to be the better trade. Always, always, always going to be it. Back testing confirms that waiting for the confirmation is always the way to go. That's why they subliminally say patience pays. Because you got to be patient for the setup. And when you see it, you got to take it. And if you don't take it, you got to accept it. If you chase it, it's going to come back and stop you out. It's consistent. It's almost as if the market is designed to be that way. It's designed to take advantage of the vulnerabilities that we naturally have as humans. And if you're able to overcome those vulnerabilities, then you have a new set of vulnerabilities that you have to overcome. It's damn. There's no way that it can be that easy. And then you start overthink, or let me rephrase that. And then the human mind is susceptible to overthinking. And that's why a lot of people, including myself, begin to overthink and overcomplicate. And try to play manipulative mental or playing mind games, because the market can be very manipulative with all the manipulative mind games that it plays. You just have to be confident. You just have to just say, fuck it. If I lose, if it dies, it dies. I'm going to take the trade and I'm going to see what happens. That has just been the surefire way to be very consistent in this market. Wait for your setup and just take it. Regardless of what you feel, and regardless of what your bias is and what you feel, regardless of what your heart is telling you, just pay attention to the charts. Now, I will say I was originally long, and like it hit my entry perfectly. It hit my entry perfectly. I believe I was only a point in drawdown, a tick in drawdown, 3 ticks in drawdown. I was looking for 26.9, and I was only in 3 ticks of drawdown, and then we got a pop up. I knew the charts were telling me that it was highly likely that the market was going to push, because this was going to be potentially a head and shoulders pattern right here. But during the time, the market was going down short. And this is something that I'm gonna have to start. If I'm going to kind of go against the trend, I probably have to have shorter targets. Or actually, I wasn't necessarily going against the trend, because it still is making lower highs and lower lows. But it was just highly likely to bounce at that level, because we got this big move up. So it's highly likely that there's going to be buyers here to buy it up. Potentially get a retest of this high, or this high right here. Price is going to potentially rebalance one of these highs, and then we could potentially see a follow through lower or a continuation. Based on this, the way that this looks, it looks like we could see a move all the way back up. We could potentially see a move back all the way back up to these highs, probably 40, 41, potentially. We do got this gap that the market is going to eventually going to want to fill eventually, but we'll see. We'll see what happens. If whatever happens, I'm going to lose only 1 point. I do like the fact that price came right back into this channel. If the bulls fail here, we're going to get a flush. We're going to get a flush back down to these lows if they fail. Yeah, I'll stay on to like 11 o'clock and then I'm going to bed. Actually, yeah. Okay. All right, so that's a clear trend line hold potentially. Let's see how this candle closes. But if you're in this short, I would highly recommend, if you don't want to completely exit out of this position, just reducing your risk. If you're in this short, just consider reducing your risk here. We got a break of this trend line. It bounced at that level I was looking for earlier. Price was able to hold, and we have nothing but stops above this resistance trend line. So we could see a massive short, well, not massive, but we could see a short squeeze here, potentially retesting this high or this high right here. So just be mindful. Just be mindful. And I'm gonna let this take me out right here. Take a small loss. I believe I was up maybe $700 or $800 in this position, but I didn't take the profits. And it looks like I should have. Hmm. Yeah, that's all I need. Maybe that like that first pullback potentially, but that first pullback. Oh yeah, that's not it. Wouldn't that be some shit? But all right, guys, that's it for me tonight. Unfortunately, we had a winner turn into a small loser, so what I could have done, and that's something else that I'm going to start implementing as well. A pre and post trade, and I'm pretty sure I already know what it's going to say. I didn't take profits. One of the questions I'm going to ask is, what happened with the trade? Why did I lose? And it's because I didn't take profits. I didn't take it. And that's going to probably be a reoccurring thing. And like I said, I'm going to probably reduce that first target probably to 54 ticks on gold. I still wouldn't have gotten it hit though. I don't believe. I was in around what, like 30, 32 or some shit like that. Forgot where I was at. I don't think I got it hit though. Maybe I did. So 1, 2, 3, 4, 5. Oh yeah, I would have got the first target hit. 5. Yeah, I would have got the first target hit. Okay. Yeah, I think I'm going to reduce my first target to about 5 points. There's that retest of that high, but I wouldn't trust it. So man, I should have stayed. So I should have took the long. I should have waited for the long. If I waited for the long, right now I would have been up about 9 points for a retest of this high. Should have waited for the long, apparently. Okay, well, lesson learned, right? But all right, guys, that's it for me. We'll definitely come back tomorrow, and we'll look for more opportunities to earn some more money. And with that said, peace out, everybody. Have a good night. Morris's, yeah, definitely take it out. She definitely took it out. Yeah. Well, have a good night, everybody.